Hi, just a quick video update on the current positioning of open interest and liquidity in GME in GameStop. Just looking here at naked delta data. The data here in the brown is DPI, and as we can see, we've had rising DPI, almost back up to the levels that we were seeing in March and April last year. And of course, that's people have been reinvesting in the market, and that's given us this recent pump that we've seen. A couple of the other things to note is we've got reasonably low IV, compressed IV, which is quite a normal thing for GameStop when we have a higher volatility in the market. The very interesting thing about this chart compared to a lot of charts when we're looking at liquidity is that the liquidity in GME has dropped back down to a very low level. So usually when we normalise it and we put it in a range of 0 to 1, as we would in our trading view indicators, we don't get an overall picture of where liquidity has gone to. It's only relative to the most recent days and not relative to all of its liquidity. So here we can see, although we've got at the moment relatively high liquidity, if we look back over a period of time, we're back into this period which is what was as tight as the October to November period, or was as tight as the April 24 period. So that puts us into a position where we're back in squeeze territory if we get a setup of either high gamma or a Vanna squeeze going into high gamma. So just to have a look at that, let's have a look at where we are. This is just a quick look. This is the closer dated stock. The closer dated stock, we just have seen some discretionary hedging coming in, but at the same time, there was a bit of opportunity for some selling of out of the money. We'll see how squeezy it gets. Definitely, this is a setup of increasing positions, which is a good way to drive the week. I think that when we see these chances of bumps coming, they're leading into macro events, which might then give us a chance of a bump. A couple of things that I've sort of been playing with, and I gave you a rundown on them recently, was my sort of thoughts about the difference between IV and of realised volatility within the market, and the DSPX. And the DSPX, really, when I go and have a look at it, I think the DSPX doesn't have a great deal of difference really to volatility. They're the inverse of each other, but they have the same effect. Here we go. This is the normalised DPI. We can see the normalised liquidity. We can see that we had this big loading and tight period going through the earnings season, and we've been in and out of the surface liquidity, and it's given us this recent bump that we've got into. In the longer time scale, we'll just have a look at the daily, which we were looking at on the other chart. I just wanted to see, so you could see the difference. We really have dropped back down. We're back down here in our current starting position for GME at the moment. So we really are back in the sort of position that we were during this period. This rise here is just a normal a low volatility to a slightly raised volatility. It hasn't been from a low volatility, a Vanna event, into a gamma event, which we saw in April, May last year, and of course we saw coming out of the pandemic. So as we came out of the pandemic, we got into a period of high gamma before breaking out. We can see that quickly. We just have a look. I think that I've got both of them on this chart. Oh, maybe I haven't. I just wanted to add them in. So I was just looking at these two things so you can look at them together. The correlation between the DSPX offered by CBOE, you can pretty well tell that they are pretty similar. When we have high volatility, we have less dispersion, and when we have low volatility, we have more dispersion. Down in here, this is the dispersion that I'm looking at is within GME. So we can see here that we've had a really good explosion here because of the high gamma, and the high gamma is in times when we have a low volatility and we have low DSPX. So we could take out of the equation looking at the DSPX and rather look at, are we going from a high volatility into a high gamma period? And a quick way to look at that is if we just change this here, or we just add SPY in, so we can see SPY in this one. So we can see here that when we had when we've had these bursts, we've come out of a Vanna period and into a high gamma period. And again, we can see we've come out of this high volatility. The volatility has dropped, and here is the SPY or the SPX in purple, and we've gone into this very high gamma period, this very high ceiling gamma period. So that's really what we need to see. We need to see a formulation of the long market, the bull markets, to possibly see one of these incredible squeezes that we've seen in the past. We're not going to see one of these incredible squeezes when we have low gamma. We really need to be in one of these positions. We need to be charged, and we need to be coming out of a period of high volatility into high gamma. All right, that's just my quick rundown today of where we are. I think we will continue to climb with the market. We're definitely we're in tight IV at the moment, and we're in tight liquidity, and both of those things are forcing people to go for the grab, and we'll still have price increases. Yes, we've had a bit of a pullback today. My perspective on the market is it's going to go a bit sideways. We've had a bit of an explosion. People are waiting for the next bit of data, and I think the next little bit of data will be some changes around tariffs and freeing up the market and giving some confidence to the market. That might be some relief in the rates market for homeowners, but also some calming down of the noise around the international order and about deglobalization. I don't know how we're going to stick all those things together, but I think that the market, to be able to game these stocks, really needs those things, unless there is a new way of gaming them. And really, that is dropping off the radar and being smaller stocks with very big liquidity builds, tightening of liquidity. And today we did see that I think we saw that in Novax today. We saw this wonderful. Sorry, this is very slow data. Sorry, yeah, Novavax here. We've seen this wonderful tightening here in liquidity. We see it's got tighter and tighter, and it's just blasted out today, even before we've gone into earnings. And that's because of the response to this low liquidity. Anyway, that's enough from me. I hope that you've enjoyed this video. Yesterday's video, somehow I overwrote onto my Mara video. Please get back to me if you've got any questions you'd like to ask. You can get it from our YouTube channel. Thank you very much.